Welcome friends. Today we'll discuss about how to read profit and loss account. There are two perspectives. One is maker's perspective, another is user's perspective. We will see in view of user's perspective how to read and what to infer from profit and loss account. Just see a mobile. A maker's perspective will be totally different. How to make more user friendly. They will see so many things. But from user's perspective, it will be little difference. We should know how to operate, how to use that is sufficient for us. But for maker's perspective, there are a lot of technical and so many things involved. So we need not to know everything. But if we are able to operate a mobile, it is more than sufficient for user's perspective for us. Same way, we are driving vehicle, we should not be knowing or there is no need to know how this car is manufactured or bike is manufactured. The process involved so many technical things or other things. No, there is no need. Even from a mechanic point of view, if we are knowing, that is great. But if you are not knowing, even that will work. But we should know how to drive properly, safely. That is more than sufficient. Same way, we should know how to read, how to infer certain information which can be used to analyze any company to what is the overall health of that very company with respect to profitability. Is there any loss? So that we should be knowing that will be sufficient for us. And we will discuss this same perspective how users should read and deduce information to judge about a company, whether the health of the company is good or no with respect to profit and loss. Second thing is, some people also say it a statement of profit and loss. Some simply say P&L statement. Some people say it income statement. Some say it a statement of operations. Some may say it a statement of earnings. There is only name difference. There is nothing in nomenclature. But overall, all are referring to same thing. Overall profitability of a company, whether it is a profit or any loss, how revenue generated, and how much expenses happened, how much is tax, is there depreciation, how much is depreciation. So there will be four things in a profit and loss account. First thing is top line or revenue or sales. How much revenue is generated or how much sales happened for a period. Maybe it is yearly or maybe quarterly. If we are seeing for yearly, we will see everything for a year. So first thing will be revenue or sales for that very period or 1 year or quarter, whatever it may be. Second thing is expense incurred to generate that revenue. So all sort of expenses will come here. Third thing is tax and depreciation. And last thing is, fourth and last thing is the earnings per share. I think it will better directly see profit and loss account of any company. Yesterday we have discussed about Amar Raja battery, and there we have seen this annual report, and inside that report there is financials. Under the financials, we have seen so many things. Normally, three things in financials comes. First is, of course, this profit and loss account. Second, or profit and loss statement. second is balance sheet, and third is cash flow. Balance sheet and cash flow we will see in another video. Today our subject is profit and loss account. So let us see that one. So this is Amar Raja, profit and sales. Yeah, here you can see a statement of profit and loss. As earlier said, this does not matter much. Main thing, what they are telling, कि how much is revenue generated for that very period and how much expense occurred. Third thing again, tax and depreciation, and fourth, earnings per share. So we will see one by one. You can see here 2 years given for the year ended March 31st, 2022. So this is for financial year 2020-22, or you may say it from April 2021 to March 2020-22. One previous year also given here for comparison purposes. This is for financial year 2021, or you may say it from April 2020 to March 2021. So first thing we see here, revenue from operation. Let us make it little bold. Yes. So revenue from operations, we can see 8,696 crore. Other income around 78 crore. So total income is 8,773.8, or we may say it 8,774 crore. So this is the income or revenue or sales for Amar Raja from this. First is from operation, that means sale of a battery, because this is a battery manufacturing company. Other income may be from interest, rental interest, or maybe investment in other places, maybe mutual fund or any place or bond. So from that, whatever income coming other than operation, or we can say the core business, apart from core business, from other sources, some income is generated, that will come under other income. Rest all will be under revenue from operations or sales from operations. Now, the term for expenses, we can see cost of material consumed. They have given figure 5,969.39. Purchase of stock in rate, changes in inventories of finished goods, work in progress, and stock in trade, employees benefits expense, finance cost, depreciation and amortization expense, other expense. So total expense is coming 8,084. So here total income minus total expense 689.8, or we can say 690 crore is profit, or we can say operational OPM here. We can comparison with last year, we can see there is little less. So this is significant information. Here we can see the revenue is increasing. Of course, expense is increasing too much. That is why this profit profit from operation is less from in comparison to last year. Why it is less? We have to dive down and find out whether material cost increased or whether employee cost increase or other cost increase. That we have to see. Then we will be able to know why this happened. And accordingly, we can take decisions. So this is a significant information. Now, other part coming, tax expense. So current tax given, deferred tax given, and total tax expense clear here. So total tax is this much current tax, this much deferred, and this much expense. So profit of the year 5 minus 6. We can say if from profit they will minus this total tax, then this will come profit after tax. Then downside you can see other comprehensive income or loss. They have given all this detail. These are minor things. Then total comprehensive income is minor. So last thing is earnings per share. So for information we see here, first one, this revenue, second is expense, third is tax, and fourth, of course, earning per share. So for information we get from here. Normally people do not go to annual report. So easy way to see any profit and loss is you can go to a screener website. And if you go to a screener website, you will type here company name. I have already typed here. So you will immediately get this Amar Raja Bakery, everything. And at top you will see profit and loss. Just click here, you will get profit and loss statement. And here you will get more comprehensive for last 10 years. So it is more easy to deduce or infer any information, anything. Here we can say March, ending March, this much. So from here 10 year you can say this revenue is increasing. If you want to see more, how much percentage? So this plus sign, simply click here, you will see sales growth. See this 20%, 34, 25, 16. So consistent more than 12%, we can see there is revenue generation. Only in March 2020, this is 0.68 and March 21, this due to COVID, maybe the reason we have to dip and dive, then we can see. Otherwise, it is more than 15%. So overall, we can see if you will see in a trend, it is good. Now we see expense. So this is overall expense given. If you want to deep dive, you can go inside. Here you can see this material cost, manufacturing cost, employee cost, and other cost. Now you can see this material cost 66, 68, 67, 66, 68, almost consistent. But here from 2021 to 2022, 4% is increased. Manufacturing cost same 5%. Employee cost again 6%. Other cost earlier 9%, then 8, again 9, 7, 7, 7. So other cost is under control or reduced. Of course, employee cost from last 3 years is 1% more, maybe due to COVID. Some extra precautions they may be taken, so this is increased. But manufacturing cost is more 4%. Material cost, sorry, not manufacturing, material cost. So here this significant increase, and that is what reflecting in operating margin, OPM. You can see 16, 16, 14, 4%. Here 4% increase, that reflects in margin, decrease in 4% of profit. Now you can go downside. You can see this other income. If you want to go behind, then you can see what are the exceptional item, other income. This I have given. This is not of much importance. Yes, now interest, how much they have to pay, whatever company may have taken loan. So this much they have to pay. TTM is 18, last 15, 11. So this interest is increasing every year, 15 crore for 2020-22. Depreciation is of course is increasing. Depreciation on all fixed assets, maybe this machinery, all this. So how much is this? So this figure is given here. So now profit after before tax is 690. Tax percentage they have given how much, and net profit after deducting from this operating profit they deducted uh, this tax, and then net profit is coming. Of course, they will deduct also interest and depreciation, and then you will get the final figure of 511. Now come downside, EPS is given. So this is also consistent, increasing way. So this is almost 30 rupees. So these information you will get from a profit and loss account, this complete information. If you want to see any other company, you will see here. Say, for example, Infosys. You see here, simply click here. Again, you will go profit and loss, and you will see from sales how much happening year by year. That is the for last 10 year given. 2011, 27,501 crore figure here showing crore, you can see, and this increasing up to this much. Again, if you go downside, you can see this how much is increasing there. Yes, of course, this March 21, it is reduced, and again from here, this increasing. Then again, expense, manufacturing cost, employee cost, and other. Of course, here, this IT company. So there will not be so much of manufacturing cost. Of course, this employee cost will be most. So that is what this 53% here. They have controlled a consistent way, and other costs also consist way. Only manufacturing costs have increased. So we can see. So we can see from here how the profit and loss is happening. Then you can see. Then interest, depreciation you can see, and this. Now let us see some other company. For example, Suzlon. These are profitable company, and then you will see how it is. Again, here you will click, you will see. Here you can see the downtrend. In 2011, 18,090 crore. That 2012, this increase. 13 again decrease, increase, decrease, and significant decrease coming from March 2016, your FY 2016, then little increase, then again decrease happening from this March 2021 to March 2022. Yes, of course, there is increase, but overall we can see there is downtrend in sales or revenue value. Of course, expenses reduced, but main thing is this revenue is drastically decreasing. If you go downside, you can say every year, this year only plus, most of the year minus, minus, minus. So we should take care of this. If whether revenue is increasing or decreasing. If decreasing, we should be away from such company. Now, profit margin, of course, here significant, but you can see here in minus and very less in comparison to here. This is more than 1,000 crore, now reduced to hardly 900 crore. Yes, of course, in some year, some minus from here, okay, little bit improvement, but not matching with, even not able to surpass this 2011 or 12 profit. So this is the significant decline. That is why you will see this in share price is rock bottom in comparison to that period you will find. So this is what we have to see. If you will go and then you will find whether company have consistent revenue, consistent profitability or no. If no, we should be away from such company. Now downside, profit before tax, of course this minus, and tax liability. There, if there is no profit, what will be the tax liability? So nothing almost we can see here. And if there is a revenue decrease, so of course net profit will be nothing in minus only, insignificant. And EPS, okay, of course in minus only. So we should be away from such company. So from here, you can easily have understanding how to read and what to see inside profit and loss account. All four things you can see. And if you will have comparison for last 10 years, you will get easily how is the trend, where profitability or company health is improving or not improving, it is deteriorating. And then you can easily have your final decision with respect to profit and loss statement. Of course, we have to see another financial also that we will learn tomorrow, like balance sheet and cash flow. There are so many parameters to look into, but one parameter we have learned today is profit and loss. If you like this video, if you find some value, please do like it and share with your colleagues and friends. And don't forget to subscribe this. Thank you. Bye bye.